Prices perhaps have peaked and will stabilize. By the way, aluminum prices have also dropped to an 11-week low, and that could be another reason why auto stocks are doing well, because finally the raw material prices have cooled off. But Amit Dixit, the Director Institutional Equities at Edelweiss Securities, joins us now to talk more about the metal space and what's been happening there. Amit, hi, good morning. A relief for a lot of the manufacturers that use steel, but you tell us, what are you sensing about the price trends? Do you see it fall further from here?
Hi, good morning. So what we have seen in past 2 weeks in India that steel prices in traders market have corrected a bit. However, one has to remember that coking coal prices have also corrected. I mean, in the past when they were like almost touching $700, now we are seeing coking coal prices which are just south of $500. Now that said, still coking coal prices are quite high. They remain genuinely high compared to the past. And therefore, steel prices are also expected to remain high because, steel producers worldwide, it's not only about India, they will endeavor to maintain their margins. At the same time, expecting or seeing a rally in the steel prices, I think we don't expect it to happen. The simple reason being that the inflation concerns are paramount at this stage. We have seen an element of demand destruction. We have seen people delaying their projects because at certain level of steel prices they do become unsustainable. At the same time, if you look at the global players' commentary, particularly POSCO, for instance, reported yesterday, and they mentioned that they have taken some price hikes for auto producers, for packaging, and they are going to take for shipbuilding customers in course of this week. The second point that they mentioned was that still people have not passed the coking coal prices. So clearly we see a price support over there. And then secondly, in terms of volumes, which is more important for us for domestic players, what we see here is that the fact that China has been decreasing its export volumes, Russia, Ukraine practically out of the market. So we see a good actually a playground for Indian steel players, the ones who are exporters. So we are not that pessimistic. At the same time, in view of the macro risks, in view of the high coking coal prices, in view of the compressed spreads, we would definitely remain a little bit cautious at this stage.
Amit, good morning. So you're cautious on the large metal stocks. Just wanted your thoughts on the one that is going to be in action today, GMDC. Since you track it, looks like a good set of numbers, but with these companies, you never know what would be peak earnings, right? But your thoughts on how to approach this stock now?
Yeah, so GMDC, we expected 400 crores of EBITDA and it came slightly higher than our estimates, mainly because of lignite price hikes taken, and of course volume also supported them. In case of GMDC, again, as I mentioned, we see structurally higher earnings because they are pegging dynamically their prices to the global coal prices, which are still at a high level. In fact, they are also reducing the discount that they had traditionally with respect to global coal prices. So with GMDC, as far as earnings is concerned, I think they are on right track. The volume growth will sustain. So you would see, even if I go by my current estimates, I see EBITDA of roughly 1,200-1,300 crores over FY23, FY24. So not really worried about the stock, and there are some pretty good things in the stock that might come up, such as their foray into ancillary mining, and that we have to wait and watch. They have also appointed BCG and A.T. Kearney as their BCG as a strategic consultant. Let the report come out. I think they will have far many vistas than only lignite mining. So we are pretty much confident about the stock. Our target price is 245 rupees a share, and of course we have a buy rating.
Amit, just to go back to steel, will one make money buying steel stocks from here over a 6 month, 1 year perspective? Because so far the market was unwilling to give higher multiples because there was doubt whether these very high prices will sustain. And now we've heard from Tata Steel saying that maybe the top is in, but prices can sustain at higher levels, right? So what about stocks, and what should investors do? Go on.
a very relevant point that people have been accustomed to going towards the average or so-called mean reversal. But I would say the mean, the bar of the mean has moved up, especially as we see now. So during FY22, companies have reduced their debt significantly, and by FY24 you will be seeing capacities coming up, and we can go on and on over there. But specifically answer your question about 6 months, 1 year, yeah, I believe there is money to be made in steel stocks because the spreads would be higher. When the spreads are higher and your debt is lower, then definitely there is more value for equity shareholders over there. There would be times, such as Q1 FY23, when there could be a temporary mismatch between coking coal price and steel prices. But structurally, we see higher spreads and in combination with higher volumes, particularly for the major steel players. So while I said that we are cautious at on the sector in view of the macro headwinds, but if you talk about long-term horizon, 1 year kind of horizon, we are definitely positive, and that's why we have a buy rating on all these stocks, because we believe that from here the steel stocks definitely have got at least 30-40% upside, particularly stocks such as JSPL, stocks such as Tata Steel.
30-40% upside, particularly on Tata Steel. What are your thoughts? Because the last 1 year the stock has really done nothing at all, just gravitated in a range. You expect a 40% upside from here for Tata Steel as well?
So Tata Steel, we have a 30% upside on the stock, and there are odd times when the stock doesn't do well. But if you look at earnings of Tata Steel, well, this year they would be doing earnings in excess of FY22 earnings would be in excess of 64,000 crores of EBITDA, and one should always remember that the European operations actually have turned around, and I really don't see that structurally the way Europe is going towards ESG, you will not see lower prices in Europe. The spreads will be higher, and therefore Tata Steel Europe would do much better than what it has done in the past. Of course, domestic operations have done well, and Tata Steel is also quite secure compared to its peers on coking coal in domestic operations. So I am quite positive on Tata Steel. And I think they have reduced their debt significantly as well. Downstream operations are coming up also in Kalinganagar and all in due course. So I think, we believe that Tata Steel is quite well.
Yeah, got it. You're positive on Tata Steel. What about Hindalco? Because, that's the one which has been saying Alcoa's outlook was not that great. But your thoughts?
Yeah, so in Hindalco, you get the best of primary as well as secondary. Now, what people was after that investors came when they announced capex. But I would say that the capex was necessity. Somebody had to do it. They are going to put a hot mill in US after 20 years. Somebody is putting it up, and it's all take or pay contract over there. So I think Hindalco people are too much concerned about the short term stuff such as energy cost and escalation and all. Now, if you look at even Alcoa's results, Alcoa did mention that they were able to pass on this high cost inflation through price hikes. Sorry, not price hikes, higher aluminium prices. And I don't think anybody has taken into account the LME aluminium that, the structurally higher aluminium that would prevail. And one should always remember that Hindalco is quite secure as far as the raw materials are concerned. So I believe that Hindalco would continue to churn cash. This quarter might be a little bit difficult for Novelis because of one factor of cost escalation and all. But in long run, I find that it is looking.
Got it, Amit. Thanks a lot for your time today and for taking us through all these stocks. We'll need to take a quick break. We'll come back with market technicals. Sudarshan Sukhani and Mitesh Thakkar will be joining us.